Hello, Jim McKinley, Guild Mortgage, reaching out to give you a quick update on what's going on in the mortgage world. The last month has been fantastic. We've pretty much since that last BLS jobs report came out that I did a little quick update for you guys. We pretty much saw rates drop. The national average dropped from like 6.75 all the way down to six and a quarter ish for a 30-year fixed conventional mortgage. It's ticked back up a hair since the day the Fed cut rates. Again, the rates came down because mortgage-backed securities investors knew that Jerome Powell was going to cut rates, that he had to cut rates. So we saw the rates get better prior to that. Since then, you know, of course, Jerome Powell, in typical fashion, got in front of a camera and gave a bit of a gloom and doom speech after he cut rates, and that caused rates to tick back up, maybe point 0.1 kind of thing. But they've just kind of bounced it in this area back and forth, and um, since then we've had multiple different Fed speakers get in front of a camera. Some say we have to cut rates more. Some say that the job market is stable and doing great, and we shouldn't be cutting rates more. The reality is the job market is not considered stable or great. We're definitely seeing job losses out there. But it's been happening for a while. We're just now starting to see it in the government numbers, which is really what's driving rates. Obviously, I can't predict mortgage rates, but I do believe we're going to hang out in this vicinity with conventional loans in the low sixes for a perfect setup. I'm seeing VA rates down all the way to like 5.6, 5.75, depending on the day. With that, this is all without any points or anything like that. But I think we're going to continue to trend kind of level for a minute, and then once everybody gets on the same page, and the odds start going up for the Fed to cut rates more at the end of the year, I think that the higher those odds get for a Fed rate cut, the more mortgage-backed securities investors will get involved, driving those indexes higher and pushing rates lower. So obviously, I can't predict the future, but I think rates for the moment are going to stay right in this wheelhouse. And then I think long term, towards the end of the year, we'll probably see them start to move down again. But who knows between now and then? The reality is these are the best rates we've seen in 2.5 years. And hopefully they continue to get better. If you need anything from me, give me a call. My cell is always best, 720-261-1410. Hope you're having a great day. Thanks.